The gold is trading lower today following a short covering rally in the previous session, weighed down by concerns that the US Fed may soon begin tapering its monetary stimulus on strong economic data. Nearly 1% down on the Indian markets as well, and basically the Indian markets have seen declines because of the rupee appreciation as well. The Brent crude in the meanwhile is trading flat as well, as OPEC agreed to renew a collective oil production cap, and some members talked about raising output in the coming year. The OPEC agreed to keep its production target unchanged at 30 million barrels per day for the first half of 2014. On your screens, the gains of course have come in more strongly for the NYMEX than the Brent crude prices. Jody Ginsberg is Vice President of Commodity Indices at S&P Dow Jones Indices, and she joins us on the show from Hong Kong. Jody, hi, welcome. Which commodities, according to you, have put the maximum pressure on the indices? Because most of these commodities and the indices as well have turned negative for 2013.
It depends which index you're talking about. So what is driving it is not only the commodity performance of individual commodities, but the weightings. For example, the S&P GSCI, which is world production weighted, was mainly driven down by agriculture, corn and wheat, whereas the Dow Jones UBS, which is also liquidity and production weighted but has limits, was driven down primarily from metals led by gold.
Fair point. Jody, also there are reports that next year may see abundance in many raw material supplies as the world is still recovering. Would that mean lower lows going ahead for many of these commodities?
Actually, what we've seen is that the suppliers have already adjusted to the abundance post the 2008 financial crisis, and for the first time since 2011, now we're starting to see shortages, and 2012 and 2013 had almost 50% of the time in shortages, which is actually good for the commodities.
Sure. So how have you seen the money flowing within the commodity exchanges around the world?
We've seen steady assets tracking the commodity indices since 2010.
Jody, which commodities, according to you, are finding favor among all of these traders then?
Traders today are finding the most opportunities more in the spread plays than individual commodities. So we see high interest in the WTI Brent spread, also in bear calendar spreads.
True that, Jody. A final question before we let you go, and this is about India. How do you view India when it comes to commodity trading?
India is very important because they are a large consumer, just like China. And while there's much news about gold in India, what's really important to know is that India is one of the world's top 10 oil consumers, and it's the fastest growing oil consumer in the world. So from 2013 to 2014, the growth has been from 1.4% to 3.1% of oil demand, adding 104,000 barrels per day looking out into 2014.
Clearly, the demand here would continue going forward as well. Jody, thank you so much for joining us with your sense on commodity and commodity indices. Let's also get on board then Chirag Kawani, who's technical analyst, AskChirag.com. Chirag, hi, welcome to the show. What's your sense really coming in for the gold and silver prices now? With the kind of choppiness that we have seen, some bargain buying, but capped gains, how would you trade it?
See, if we look at the precious metal sector, they have been making lower lows and lower high, and the sector is completely going on with a negative euphoria completely. At this point of time, $1,200 on COMEX gold is acting as a very good support. Prices have bounced back from there before to the levels of 1345. Yesterday also from the levels of $1,204, we saw a sharp rally coming up. At this point of time, I would be waiting to see if prices are able to make the first higher bottom and able to cross yesterday's high. That would be the first indication that a short-term bottom is in place, and the prices could recover till the levels of $1,315 to $1,350 in the short term. Same way, $19 on silver is acting as a good support. Till then prices are able to maintain that level on a weekly closing basis. I'm expecting prices to rebound sharply till the levels of $22.50 to $24 in the next 9 to 12 weeks coming. In the domestic market, one can look to buy silver around the dips at 44,200 with a stop loss below 43,500. Immediate upside target would be 46,800.
Vijay, what's your sense now coming in for the space? I mean, of course, you have been advising a leverage buy into this one, but at these, or rather the physical buying into this one, what's your sense now coming in for silver?
Manisha, in the end of November, when the 5th December contracts were expiring, at least where rollovers were the maximum, I remember the price was close to 44,100, 44,200 odd. And today, the March futures have become the prompt month series, and I'm seeing a price of 44,000 to 300 odd levels. So after having paid a cost of carry, you're back to square one. Any leverage buyer who's initiated longs in silver is already losing money because even the cost of carry is not being recovered. Now, this is a phenomena that's been going on from one quarter after another, and as long as this is in place, it's been a year now since I've been recommending staying away from the leverage space, because your cost of carry is in excess of 18 to 20% inclusive of all statutory and execution costs. B, your risk-free interest income is 9% from a bank FD. So you're actually paying twice more than your risk-free interest receipts as cost of carry with nothing to show for it. Even after you roll over your longs, you're not even able to recover the cost of carry. So unless you basically start showing at least a recovery of cost of carry in any one derivative cycle, I think I would like to stay away from the futures space. As far as buying physical silver is concerned, I would still stick to the levels of 41,500, give or take a few hundred rupees here and there, for the next tranche to be bought, and that next tranche would have an allocation of not more than 10% of the total allocation earmarked for silver. Even there, one would need to wait and see whether the correlation between price, open interest and volumes are indicating some amount of bullish support coming in, because I think it's going to be a long grind for silver to go up, and one needs to have a viewpoint or perspective of many quarters time frame at hand.
Vijay, how would you look at the crude prices currently? Because this week has been quite positive when it comes to those prices, but at these current levels, is it a buy or would you rather sell the rally?
Manish, I'm not comfortable buying. I've mentioned that many a times, and I think I talked about 6060 to 6080 levels being the first inflection point where selling will come. Beyond that, 6120 odd levels is where I expect even more serious long unwinding. So I would actually seek short selling opportunities on crude oil rather than try to buy the dips, because if at all you're expecting the rupee-dollar parity to favor the rupee and the rupee to strengthen a little bit more from here, I think that will have a direct bearing on WTI crude prices on the MCX. So close to 6065 to 6080 levels, I would seek shorts rather than go and buy dips.
Chirag, how would you want to trade copper prices ahead of the data that's coming out from US? So ahead of that, what kind of prices do you have in mind?
See, if we look at the copper prices in the short term, they have given a rally from the levels of 430 to around the levels of 452. At this point of time, again, we are seeing price losing momentum and prices have started to make lower lows and lower highs. So I would be looking out to taking shots at the levels of 448 to 449 with a stop loss above 453. Immediate downside target would be till 438.
Vijay, how would you look at the nickel prices at these current levels? While there's a rebound in the sector, but do you see it sustaining?
880 to 888 odd levels is where I would expect the first round of resistance to come in. If that is overcome, I think the closer it gets to 900, the more serious there will be long unwinding and short covering coming in on nickel. On the flip side, I think the closer it gets to 835 to maybe 828 levels, you will see buying support emanating. This is a technical rebound. I'm not calling it a trend reversal yet. It's a fairly strong technical rebound with the bears being cornered and forced to squeeze their shots, and therefore the price is rising, but I wouldn't bet the bank on the long side at this point in time.
Fair point, and we still are awaiting loads of data from European Union and of course the US to come yet. There's no respite when it comes to the sugar prices in India. They have declined for a fourth straight day due to sluggish demand from bulk consumers and ample supplies, as the country is set to produce surplus sugar for fourth straight year. The rising supplies are putting pressure on the prices. Demand is weak and is likely to remain weak for the next 3 months as well due to the winter season. On your screens, very sharp declines coming in for guar seed as well, down 1.5% on supplies from the new season crops started arriving amid sluggish demand and prospects of higher output. The FMC has withdrawn 10% special margin on the long side of all guar seed and gum futures, but even then you haven't seen much respite coming in for the prices. In pulses then, the chana prices also have seen some pressure coming in. There was a gain earlier as some lower level buying on hopes of a pickup in local demand did come in. But then the ongoing sowing and conducive weather has capped too much of gains there. On your screens, nearly 1% down. Same is the case with the edible oil space as well. The strong rupee, a drop in overseas edible oil prices, and as demand was moderate in local spot markets, all of that seems to be putting pressure onto this sector as well. Chirag, what's your sense now coming in for the edible oil space? Because the declines have been sharp for a second straight day now.
Edible oil is looking bearish in the short term. Refined soya oil has been, trading in a larger range of 675 on the downside, resistance on the upside at 723.28. After taking resistance again on the upper band of the channel, prices are retracing back downward to test the lower end. One can look to take fresh shots on any rise to 703, 704 on the December contract with a stop loss above 709. Prices would retrace back till the first target of 695. If that is taken out, I'm expecting prices to move even lower till the levels of 683 to 683 to 84. CPO prices are making a bearish pattern on the charts. Clear a head and shoulder pattern is seen. Once it breaks 559 on the downside, one can look to take shots with a stop loss above 567. One has to clearly wait for the break of 559 for the pattern trade to get activated. Then the immediate downside targets will be till 546.
Fair point. And one thing, Vijay, that we have been talking every single day for last 1 week has been sugar prices, and it has been declining with strong numbers.
Manisha, I would still maintain my view that the mid and far month futures are likely to get support at 2,720-25 levels. I'm also waiting for lower levels to buy into sugar futures in the mid and far month series, because if you study the sugar cycle, it's a 7 to 8 year cycle with 3 to 4 years of 4 to 5 years of declines and 3 years of a rally. This is the fourth year where you have a production surplus over demand, and therefore I think we could be nearing the end of that cycle. And besides, the kind of imbroglio that you have with the state-administered prices and the millers paying that kind of price, I think it's not even factoring in the rise in diesel prices, the higher farm wages. All that will get factored into the financial futures market within the next 3 months time frame. So I'm willing to bet long on sugar, but this is not a day trade. This is for a trader who's willing to get well entrenched into the trade, dig his heels into the ground and carry over the trade for the next couple of months.
We have 30 seconds, Vijay, and you could give us a word about chana as well. 1% down on that. How would you want to trade it tomorrow?
It's completely correlated with the bullishness in the rupee, and the more the rupee appreciates, I think the more chana prices will decline, but I don't expect it to go down below 2,900. Thereafter, in the next 3 to 4 months time frame, 3,375 is what I'm betting at.
All right, so that's the verdict coming in for the agri space. Thank you so much, Vijay and Chirag as well for dropping by.